Hey everybody, it's Mark Yegge. Welcome to another weekly stock market update. Today is May 3rd, 2024. And what an interesting week it's been, especially if you've been in Apple or maybe Tesla or one of those things. Market's shifting, and I know it feels like it's shifting toward the negative, but it seems to be shifting toward the positive to me anyway. So let's take a look here. Let's go to this screen here. Hope you can see that. In any case, all right, we have a, right now it's a yellow market, and yellow markets tend to stay yellow for a bit because they have to. Otherwise, you get all these crazy head fakes. And everybody thought, oh my God, the Fed said this, and they're going to not print money, and they're going to maybe raise rates. Everybody knows the Fed's probably not going to raise rates. They really can't. They would be raising rates on themselves. So they're figuring other ways to create more money, and they're using the Treasury to do it, like I've been saying for several months. And there's a problem in the yen going on right now. So that's fostering some strength in the treasuries, although the yen is selling off the treasuries. Some weird stuff going on in the financial markets around the world. And that's why we're seeing some weird volatility in the markets in the United States. However, by Monday, I think we're going to be green. And so this market shook off this little downtrend, which we've had for the last 3 weeks. And now we're getting ready to go green again, I believe. And I think that's because now we're getting more money being printed somehow. All right, NASDAQ composite, nice chart, a gap up above the 50-day moving average. A couple of really good, solid pieces of data there. It's going back and testing the 50-day, which it will probably do. But if we can get this market to go green, it's probably going to stay above the 50, and then it's going to go up and maybe try to take out that 16,538 at the top there. We'll see about that. On the S&P 500, we've got a break, well, not a break, but it gapped up, hit the 50-day, and bounced back down. That's not good. So that's like the opposite indicator on the NASDAQ. So you can't really, put those two dots together and make any kind of a picture out of it. And then the New York Stock Exchange looks just like the S&P 500. So, and then the Dow does too. So we've got a market that's not out of the woods yet. We've still got that it wants to go back up, but it doesn't know that it wants to go back up, if that makes any sense. Anyway, this is kind of a boring week, unless you're in a couple of stocks like Tesla or Apple. So you could see the volatility has come down from a spike up at 2136 all the way back under 15 to about 14, something like that. And that's kind of where it has been for months, most of the time. And so that's telling us that we're maybe in better shape than we were just a couple of weeks ago when we had that huge spike up and everybody thought, oh my God, the Fed's going to raise their rates. And then with the double speak that Jerome Powell, the Fed chairman, does, you can kind of hear, well, maybe he's not going to, or he's going to come up with something else. In other words, he's saying he's doing less quantitative tightening. Okay, that's supposedly bullish, but who knows? Whatever. It's all a bunch of double talk and it's a bunch of crap. All right. Apple had numbers last night, reported what I think are lousy numbers. Like they're having sales slowdowns, they're having earnings slowdowns, they're having unit sales slowdowns. But Apple is so big, it's like the blob, right? It's coming through town and sucking everything into it. And they also at the end of that just wiped all of that negative stuff that I just said out by saying we're going to have $110 billion share buyback. So the stock was up, $12 or $13 overnight, and this morning it sold off a little bit this morning, but I don't see that there's a lot of really great fundamentals, but I've got other people in our group. We just had a long debate about, what Apple is really doing. And, some people think it's amazing. They got AI and this new chip coming out and, that Apple's like, there's nothing wrong. And I'm like, I don't know. They got a lot of slowdowns going on. And when you have a huge company like that, you can't expect them to grow double digits anymore. But I just didn't like this quarter. So, but that's why they make a market. Some buyers, some sellers. Who knows? We'll see what happens. I think it's going to come back and fill that gap before all is said and done here, back to 173, 174, something like that. I think a year from now, we're not sitting too much higher than 185. But you know what? If the chart tells me something else, I could change my tune. Who knows? All right. Tesla had numbers last week. Really great report. I talked about it last week, and the stock had this gigantic 240% spike in volume as it spiked above the 50, as as its crossovers started to work in the right direction. I suspect it's got a couple spots on the chart that it wants to get to. The first is going to be the $200 level. And then that's always a level, is that even number level. And then it's got 205, 206 in that gap area, that swing point area from a couple of months ago. I think it wants to go there. It's doing a light volume sell-off to get rid of the people that are still shorting. And then hopefully it'll take out that swing point, which is going to be hard because it's got to do huge amounts of volume, like 240 million shares, to be able to take that swing point out from 5 days ago. But if it does that, then I think you're seeing, $200, 205, 60. And then if it can get through that, then I think we're talking about the 200-day moving average. Amazon, it had that big spike down. I think that was on earnings, but it was a beautiful hammer candle, actually, where it recovered very quickly. And now it's back above the 50-day moving average. I think Amazon's doing just fine. Super Microcomputer, it's got a couple of spots on the chart. It's filled in 2 of those gaps on the left. And now it created a new one that it wants to go fill just this week. So it had numbers, it spiked down on numbers, it's recovering. There's a couple of gaps there on the chart that it wants to fill. We'll see what happens. I think it's in good shape, but it's going to trade, like I've been saying for several weeks, between about $700 to $1,200. That's where I see it trading. It needs to save that 50-day moving average now that earnings are finished. Otherwise, it's going to be a long time consolidation here. But that's the first sign of the ending of the consolidation. Nvidia gapped above the 50-day moving average. That's very healthy. Nvidia's got numbers in a couple weeks, so be careful if you're holding that one. Maybe sell calls right now out of the money and then protect yourself as it gets a little bit closer. I think I'll leave it there. It's kind of been a boring week anyway, and so why make it even more boring by boring you with more stocks? There's lots of good stuff going on and lots of bubbles underneath the surface. I suspect that on Monday, Tuesday, we've got a green market. Here, what we always say is that when we have a green market, we have to buy something. So hopefully you're getting your watch list ready with really good quality stocks that are followed by big institutions and that can be taken higher and that you can make generational wealth. But don't try to hit it out of the park. Just try to hit some singles and be happy making, a couple of percent, 2 to 4% a month. That's what we strive to do. And as always, thanks for tuning in to the weekly stock market update. I hope it's worth your time. Give me a like and a subscribe if you're watching this on YouTube. And if you're one of our subscribers, thank you for subscribing. We have a free subscription, by the way, for everybody else. It's called Insider Tips. You can get it by going to cashflowmachine.io/tips and join and get this video plus all of our other videos that we make throughout the week so that you can be updated on what's going on in the market. Thanks again for being here. Have a great weekend, everybody. See you next time. Bye.